To stay consistently profitable as a trader, one must be able to catch the big move in the market. And this is in fact a challenge, right? Because the market will never move in one direction. Once you enter the trade, you will see that it will go up and down, up and down. In many cases, it just go to the other direction and hit the stop loss. So then how can you catch the big move in the market? Well, there are some areas in the market where if you enter in the right place, in the right time, it is possible for you to catch the big move in the market even if the market is not trending. So in this video, I'm gonna show you with proven example that how you can catch the big trade in the market on a consistent basis. Sound interesting? Then smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys, so let's begin first with the trade that we have sent out to the students yesterday. You can see this is a 3-to-1 reward to risk ratio trade. In fact, a very big trade. And the way I'm showing you exactly, you learn how this trade worked out, and I'll explain step by step how you can catch this kind of trade from the market. Now first, let me debunk a misconception. That many retail trader thinks that when you catch a lot of peep, that is where you are taking the big move in the market. In fact, that's not right. Why? Because you can gain $200 from 200 peep, okay, or you can gain $5,000 from 20 pips. So pips doesn't matter, okay. The main important thing is a risk to reward. All right, how much is a per peep value? If you open a trade with 0.01 lot and then let's say you gain 1,000 peep, how much you gain? But if you open a trade with let's say 2 lot or 3 lots and then 20 pips, how much money you can gain? So it's not about the pips, it's about the volume of the trade. This is the first thing that you need to understand when you are looking for the big move in the market. It's not all about the the candle that you see. It's about the risk to reward so that you can catch the biggest move. In fact, to catch the big move in the market, there are 2 ways you can do that. Keep in mind, the first way is being present in front of the chart. This is the first method that will explain how you can catch the big move in the market. If you don't have enough time to sit in front of the chart to see the market, there is a second method that I will explain how you can catch the big move in the market by placing the pending order in the right place, right? So let's look at this one and I'll tell you the possible scenario that what other retail trader would do and in what situation I have taken this big trade and how you can understand it. So first of all, let me replay this chart, then you'll understand in fact what happened in the market. Now this is the doji. You can see this is a doji that has during the London session this doji was forming. Now before 2 hours earlier of this candle close, what we have seen that this market was creating this kind of red candle. This is a 4-hour time frame in Euro NZD. Now why did I enter the trade here? See, before candle close, probably 20 to 15 minutes earlier, this candle has gone in that zone, and that is where I have sold this market with a narrow stop loss. Now I could wait for this candle close as a doji. All right, I will explain why I have entered the trade and what is the strategy behind it. Now I could wait for the close. Now if I wait for the close, then what would be the risk to reward ratio for this trade? Let me move that one here. Now it's coming to 1.36 risk to reward. See, it's almost 1 to 1.5 risk to reward if I entered in a candle close. exactly the same trade. Just by moving this entry little bit to the upside, we have gained 3 times profit on this trade. You understand? So it's a very important that you enter in the right place so that your stop loss gap becomes smaller and your lot size become higher. So in that case, you are not losing. If it is going wrong, you are losing the same amount, but if it is going in the right direction, you make a big money. And that is the key points of this strategy in this video. So now, how do you do that? Like, in fact, when you see, let's say the price was here before 2 hours of this candle close, how do you know that this price will go in fact up? Now this is the key points that you need to understand. Keep in mind that to enter in that way, you need to be present in the live market. Now closely look at those candles here. You see that when this candle form, you see there is a huge liquidity gap. It has crossed the previous doji's high, grabbed the liquidity, created a doji. Now after that, there is a bearish engulfer followed by another doji. You see that this is the doji here. It has grabbed also liquidity from the top. Okay, so with that liquidity gap, we have seen the price has broken down to this level. Now when 2 hours earlier of this candle close, when I saw this price here, there was a probability for this one to go up again. Now this is not always the case that the price might go up again. So if this is the plan that I made when the price was here, that if only this price is going to go up along this zone, either hitting the high again, then only I will sell this market, keeping stop loss above this side. This is the plan, trading plan. Now why did I make this plan? That's the question. Is because if you closely look at, you will see that there is already once a huge liquidity gap happened. Okay, the price has dropped. Now the second time when this price has come here, the same thing happened. The price has gone up again, grabbed liquidity. Because it grabbed liquidity twice, once I saw that this candle has gone up here again, that is where the probability that this price will drop again, because it already grabbed liquidity, and likelihood for this price to drop is very, very high, right? And that is where the entry is stop loss above. And that's, you can see that 3 times trade already, it's still going, and then the price immediately drop to the profit target. Okay, so concept here is that when you see multiple time liquidity gap already happened, and the price after once liquidity gap dropped in terms of bearish market has gone up again to the same zone where there is a liquidity gap happen, high probability that this price will continue to drop. Now in the bull market, just the other way around. This is the first method that you can enter a trade in a market to find a high probability trade setup. Now let me tell you the second method. Let me go to another examples to show you in fact how you can enter this kind of trade in a second method, where you don't have time to sit in front of the chart and looking at the trade. Okay, so this is the second method that you can enter a trade. Now you can see this is the dollar CAD. Okay, we have seen that yesterday, this one also, when there was a live session, this is what exactly expected in the live session after this strong breakdown with this bearish engulfer on dollar CAD. What happened is that the price, as soon as this candle closed, there was a big move happen. Okay, now you can enter, as I mentioned, that in impatient case, when the traders are impatient, they might enter here, stop loss above this high. Let's say you took a take profit 1-to-1, which is it's hitting that profit target, right? Now let's say you didn't enter a trade here, and even you are not watching the market, then where is the best place to place a pending order to increase the risk to reward ratio? This is the question that you need to ask. Keep in mind, the best place always is just 2 to 3 pip below the nearest support or resistance. As you can see, after this red candle close, where is the nearest support for this market? This is the nearest support. As you can see, there is a long doji. Now there was, you see, there was a big move up and then consolidated and then has broken down, right? So this is basically a big liquidity gap happened in this zone, and with that liquidity gap we have seen the price has completely broken down. Now when the price breakdown, there is high probability that this price will go ahead at least test the nearest support, and couple of pips below the nearest support. If you place a pending order, see how your risk to reward ratio is getting improved. Now here it is 1-to-1. Let's move that entry here. Now you can see that almost 2-to-1 risk to reward ratio, while just by entering a market here you are gaining 1% from one trade just by pushing your entry near a support zone or resistance zone where the price is likely to go up and test at some point, will increase your risk to reward ratio dramatically. And this is a big game changer, guys, as you know that, because being impatient ultimately just will make a poor risk to reward ratio, and then over time it might be difficult for you stay consistently profitable. But if you know exactly where to enter in the market, it becomes much easier for you to find the great trade possible. So let me give you a couple of more examples so that you understand it properly. Okay guys, so let's look at this example on gold. I'm just replaying this chart so that you understand it. Now you can see there is a big bullish candle here. There is a strong breakout from this long-term structure with this bullish engulfer. Now this is a news candle, as you know that it has a huge volume in it. So let's see how we can enter this market. What are the methods we can apply? Let's assume that you don't have much time to wait a couple of hours to see where the price is coming. Instead, what you can do, let's say how you can place the pending order. Now there are two ways you can enter this trade. By being impatient, for example, going long from here, you know that there's a bullish engulfer and you can go long. Let's say that's one also, it's a big stop loss, so let's keep it at 1-to-1 risk to reward ratio. You place the trade with 1:1. Now what other places that you can enter the trade? As I mentioned, when you see this kind of strong movement, you need to find out the nearest support or resistance level where the price is likely to come and test. Now if the price drop, where is the nearest resistance turning support? You can see this is the high. Let's draw this level, and this is the high, the previous resistance, which is turning support, exactly this point. So what we need to do is put it a couple of pips above so that the price come and hit your entry. Now if you put your entry a couple of pips above and see what happened. Now this is 1-to-1, but if you move your entry here, see what happened. See, it almost turned 2.3 times profit target instead of 1 time. Now let's see what happened with the trade, and if you in fact run the trade, you see you get triggered. Sometimes you might miss the trade, that's completely fine. When sometimes if you enter the market, you always on a trade, but in terms of pending order, it is true that you might miss some trade, but that's completely fine. There is a lot of trades in the market and you always will find trade. If you miss a couple of, that's not a problem. The best thing is that you have a big risk to reward ratio. You can catch the big move in the market to stay consistently profitable as a trader. I sincerely believe that, guys, this important video was helpful to you. If you find value in it, then don't forget to subscribe and also like this video, and also watch these two videos, will be really helpful to you. Thank you. I'll see you soon in my next video.